Hey guys, this is Investor Blue Book. Today I want to talk about free cash flow. Now, this is one of the common profitability measurements you'll hear about companies and their financial statements. So free cash flow, it's I guess a more truer measure of earnings. It's not a GAAP performance metric, generally accepted accounting principle, but it's commonly quoted because it represents the actual cash generated by a company. So it represents the cash the company generates after accounting for cash outflows to support operations and maintain their capital assets, with capital assets being large assets that depreciate over time, over a year, like a building or a large piece of equipment, etc., used to fund business operations. And as I touched on earlier, it differs from GAAP net income or earnings. As a measure of profitability, free cash flow excludes non-cash expenses found on the income statement, and it includes CapEx and changes in working capital. So it's just a cash purely generated by business operations, no non-cash items, and that cash is what's available for the company to repay creditors or pay dividends and interest to investors. So the formal, I guess, how you would calculate it, you can take the cash flow from operations and just subtract the CapEx. You could calculate it with items coming from the income statement and the balance sheet, but because the cash flow from operations already has the non-cash earnings, it's easier to just start with that, and then you can just go one section down and remove CapEx from the statement of the from investing activity on the cash flow statement. So to show you a live example, I have the latest 10Q here from Netflix. So we can use this. We can scroll down and find the statement of cash flows on page 5. So here's what I'm talking about. The cash flow from operating activities. This is 3 months ended June 2020, their latest quarter. And, you know, the cash flow from operations starts with net income right here of $720 million, and it adds back all the non-cash items. So this is from the income statement. So this is what you see for like GAAP profitability and what's used in a lot of earnings multiples. But that's not, it includes a lot of non-cash items. So you can see what they back out here. Adjustments to reconcile net income to net cash provided by or used in operating activities. So Netflix produces Netflix originals. So you see here additions to content assets. They can depreciate that over a certain period of time. So yeah, they use that. They spent that money, but they're able to depreciate it over 5 years. So looking at Netflix statement of cash flows, we can look at their cash flow from operating activity at the end of 3 months, ending June 30th, 2020. They had $1,041,076,000 provided in cash flow. So this is the amount of cash generated by the business. It excludes any non-cash items, payables, receivables, depreciation. So this is how much the owners of the company get, how much cash it's self-producing. And then right below it, the cash flow from investing activities. You can back out this purchase of property and equipment of $141 million, $141 $1,741,000 leaves you with roughly $900 million in free cash flow. So that's Netflix for the quarter. I think right now, because of COVID, they don't have a lot of CapEx. A lot of shows are halted in production. But this is an example of Netflix, a company that a lot of people, they've had GAAP net income for a while, but because they pump so much cash into investing in Netflix originals, historically, they haven't been cash flow positive. But recently that's changed due to COVID. They're not really producing as many shows. So I also want to look at Apple over here. I pulled their latest 10Q, and we can scroll through it and find the information we're looking for. So just scroll through the financial statements, scroll down, income statement, balance sheet, shareholders' equity, and here we go, consolidated statement of cash flows. One thing I noted, Apple's is 9 months ended, so that's not for a quarter. It's for their fiscal year to date. So same thing here with Apple. The first section starts with operating activity, and we can see the cash generated by operating activities year to date of $60,098,000,000. And then we can find in the investing activities, where is it here? Payments for acquisitions of property, plant, and equipment. This is denoted in millions, so $5,525,000,000. So that leaves Apple with about 54.5, 55 billion in free cash flow. And I think they do about 250 billion in earnings. So it's in top line sales. So yeah, companies like Apple historically have produced a lot of cash flow. And then there's companies like Netflix, which we looked at earlier, Amazon also, who have invested a lot in growth. So they're companies that historically weren't profitable, and they took all their cash and they pumped it into CapEx, investments, R&D to gain market share and grow. But as those companies get more mature, their earnings and their cash flows start to turn positive. But it varies depending on the business model. But, in addition to earnings per share, cash flow as a summary, it's not, a GAAP approved earnings measurement, but it's something that a lot of investors look at. If they were to buy the company as a whole, that's how much cash it would be spitting off. And you'll see companies that don't have GAAP earnings but are getting there and in the growth stage. I know companies like Uber do this, where in their investor presentations they'll frequently quote cash flow or EBITDA multiple. There are kind of other alternatives that investors can look at to value the performance of a business other than GAAP net income from the income statement. So it's an example of how you calculate it here. Just go to the statement of cash flows, find the ending cash flow from operations, and subtract CapEx, and it will often be denoted as purchases of property, plant, and equipment, PPE. So that's how you can decide kind of a truer sense of the profitability of a company when you're reviewing its financials. All right, thanks for listening, guys. This is Investor Blue Book. I'll post another video as soon as I can.